the news of the day, which is essentially the Enforcement Directorate announcing today that of all the assets they've seized in India and across the world from 3 fugitives, Nirav Modi,
$8,440 crore to public sector banks who have suffered major losses because of fugitive offenders like Vijay, Mallya, Nirav Modi and Mehul Choksi. In fact, this is not coming as a surprise, keeping in mind what had recently happened where DRT on behalf of even SBI-led consortium, which of course had lent a lot of amount to these fugitive offenders, sold shares of UBL for, of course, rupees of more than 5,800 crores. In fact, ED in its press release, and I quote, mentions that they've also transferred shares attached worth rupees 6,600 crore to SBI-led consortium. So for a 6,600 rupees share, SBI was able to sell this, DRT was able to sell this for rupees 5,800 of UBL. In fact, ED also mentions that further realization of rupees 800 crore by sale of more shares is expected by June 25th, which almost rounds up to the mark of 6,500 crore. In terms of complete loss, as per official data released, ED mentions that Vijay, Mallya, Nirav Modi and Mehul Choksi accused of defrauding banks by rupees 28,585, out of which 18,170 has been attached by ED, and out of this attached amount, almost 9,731 is already given to banks who have, to public sector banks who have suffered loss. So that's almost, if you see, 80.
All right, one important thing to note in that report is that this is the assets which have been handed over to these banks. They still have to go ahead and sell them and recover all of their money. Some money has been recovered by State Bank of India by selling shares, but all of these assets in all which have been recovered by the Enforcement Directorate, they've attached helicopters in some case, properties in some case, all over the world actually. They have to actually be sold to someone who's willing to pay that price to make a full recovery. So it's a long process, but yes, some headway has been made there. Now, let's start from what the Enforcement Directorate has done. And this is a case where the borrowers were named willful defaulters as per the law. They fled the country. They're fighting these cases in various courts across the world, wherever they are, 2 of them in London. And the Enforcement Directorate went ahead and seized their belongings, their assets, and has sold them off. But for everyone else who couldn't pay back their loans, I'm talking about businesses, promoters, there is the IBC. Now this process envisions, instead of liquidation, someone will come in and go through an entire process with the Committee of Creditors, Resolution Professionals, the NCLT courts, and take over that business and revive it. The latest example of that today was JP Infra and Suraksha. We saw Jet Airways finding a buyer as well. We have to look at how much the banks are getting out of it. And in some cases, the recovery has been on an average as low as 26%. In the case of Jet, it is in single digits. Priyanka Iyer is joining me now and listing the big cases, the top 5 which have seen decent recoveries, and why just those figures don't give us the full picture.
Well, let's take a look at the top 5 cases in IBC which have grabbed headlines over the past few years, either because of their long-drawn timelines before they got finally resolved, and also because of the high exposure that lenders have had to these companies. The top company, of course, is DHFL with 87,000 crores of claims admitted from financial creditors. Piramal's bid stands at 37,500 crores, so the haircut here is 57%. And the timeline also, the company was admitted to NCLT in November 2019, and the final NCLT approval has only come in June this year. Videocon Industries, well, the group companies had an exposure of 64,000 to lenders. The bid that finally won for Videocon Industries was only 2,779 crores. So the haircut here is huge. 96% is the haircut. Bhushan Steel, one of the fastest resolved cases, especially from the first dozen that RBI had referred to the NCLT. The company only saw 37% haircut, and the timeline was that it was admitted to NCLT in July 2017, and the approval from NCLT came in as soon as May 2018. SR Steel, one of the most landmark cases in IBC, haircut only at 15%, but the timeline though was admitted to NCLT in August 2017. The final ST judgment came in November 2019. Bhushan Power and Steel, one of the longest timelines that we have seen. The company was admitted to NCLT in July 2017. The deal closed only in March this year because of the long drawn litigations that the company saw. The haircut was at 60% for lenders. So while some of these companies have seen good returns, the others have seen massive haircuts. And if you take a look at IBC on a larger level as well, companies easily are taking over 2 years to get resolved, and also massive haircuts in a lot of the other smaller companies, liquidation in some cases. That is skewing the overall recovery ratio for lenders.
So let's understand what's going on, and let me also contextualize this for you. So for example, yesterday Harsh going next, please, PMO India, we can't have our hard-earned public money being stolen. So very strong words there coming in from Harsh Goenka on what exactly is going on. Now, is that the way to look at it? Is this loot? Is this a deficiency in the process? Let's go across now to Rajneesh Kumar, former chairman of State Bank of India, who's joining us on the show. I think he's a top banker who has exited State Bank of India with huge recoveries from SR Steel especially, so has first-hand knowledge of how the whole process works and what the deficiencies are, if any. Ashish Chochoria is joining us. He's a resolution expert who very recently has brought Jet Airways resolution process to fruition. And of course, Tamal Bandyopadhyay, author and senior journalist, also on the show with us this evening. So welcome, gentlemen. Thank you for speaking with us. Mr. Kumar, let me begin with your perspective, and I'm going to make this slightly controversial because I'm also going to ask you to respond not exactly to what Mr. Harsh Goenka tweeted, but that sentiment that why should we have an 80-90% haircut, and people often compare it to loans that the Aam Aadmi takes, that if you take a personal loan or if you take a home loan, no banker is going to give you 80-90% or 60% haircut if you can't repay your assets. Why this treatment for business?
Yeah, so I will not go into exactly, I have not read what Harsh has said, but as far as the process is concerned, IBC was introduced in November 2016, and before that, what were the remedies available to the bankers? So one was, we had Sikh Industrials Companies Act, BIFR, where the existing promoters will continue to drag with no outcome. Bankers' experience with DRT SARFAESI, not a pleasant experience. In any capitalist society, let me say, the mechanism for exit for inefficient firms is only through the bankruptcy. All countries have this law, and India got this law only 5 years. These 5 years have been a learning experience for everyone. Be it resolution professional, be it even the NCLT themselves, the members, the committee of creditors, the lenders, the borrowers. So when we are talking about IBC, its success cannot be measured by what you recover in those cases which you have mentioned. Its success has to be determined on the basis that the kind of paradigm shift it has brought between the debtor-creditor relationship. Till such time this law came, the promoter or a defaulting promoter will tell the banker on his face that it is your NPA, your problem, you resolve it. Not anymore. So that is one. Second is, as far as recovery is concerned, it all depends upon the buyers. What does or what value he sees? Why did we have such a fierce fight for buying Binani cement? Why did we see even a fierce fight in the latest case which you are quoting between Piramal and Oak Tree for Diwan housing, and the bid which started from, say, somebody had put a bid of around 12 or 15,000 crore, it went as high as 35,000 crore. So in services sector, what do you buy in an airline? They don't own aircraft. They don't have slots at the airport. It's a service industry. Say Jet headquarters, because she is sitting here, and the example of Jet on.
No.
So, what did they own?
Yeah.
One headquarters which was financed.
And Jet saw very low recoveries. Okay. Okay, so no, I get the point. I get the point. It's something is better than nothing, essentially. So you're saying something, sir, something is better than nothing. Earlier, there was this evergreening going on, and, bad loans were piling up. At least there's a stop to it. The culture of, promoters has also improved. No one wants to risk running into bad debt.
Just listen what I'm saying. I'm not saying that something is better than nothing. It's not the case. When lenders lose money, they also feel very bad. But the question is that the buyers, it is a transparent process, it is a bidding process, expression of interest are invited, it is a court-governed process. If there is no buyer for any asset, what do you do? And say, for example, aviation sector, worldwide you look at bankruptcies, and what do they get? 5 cents against a dollar. So it is very common. If services industry no asset, the recovery or the resolution will be very difficult. If you have assets, like in a steel, we had very good plants. We had identical debt for 3 assets: SR Steel, Bhushan Power and Steel, and Bhushan Steel. But recovery differed because the buyers saw more value in SR, which was a port-based plant, than Bhushan Steel. And they say more value in Bhushan Steel than Bhushan Power and Steel. So it is a process. I think we should not run down or criticize this process in the manner which we are trying to do. And as I said, that it is only 5 years that we got bankruptcy laws. There are certain deficiencies in the process, but the success of the law or the process cannot be determined by making it a recovery legislation. It is not. It is a resolution mechanism, and its intent is to preserve the value of the enterprise. And as far as promoters are concerned, again, if they have done something wrong, so the agencies are there. ED has done a fantastic job in the 3 cases again you were mentioning. So enterprise and promoters are different.
Yes.
That is recognized. That promoters and enterprise is different. In the case of IBC, lenders, creditors are concerned with preserving the value of the enterprise to the extent possible. And a promoter has done something wrong, something criminal.
Right.
There are enough laws to deal with it.
No, so I'm not talking about willful defaulters here, and I assure you no one's intention is to run down the IBC as a process, but it is a question that is arising. It's only fair that we discuss it and look at all aspects of it. So let me bring in Tamal Bandyopadhyay for your view. Do you agree with some of the points that Mr. Kumar is making and think it's unfair to say that why such large haircuts? Because there are different circumstances for different kind of assets, and I said it, Mr. Rajneesh Kumar didn't, that something is perhaps better than nothing. It's better than, the whole company going into liquidation or evergreening of loans. At least there is some kind of recovery and the business has a chance of going on running.
Well, here is my take. Yes, I largely agree with Mr. Kumar. It's not something better than nothing. It's essentially what's the, it's a very market-driven stuff. Now, first, let me explain to you in a very quick way. There is no comparison between what you are getting for Videocon and IBC, what the lenders are getting, and what is ED is getting through attachment of assets. Now, it is outside the IBC process. Now, this is one case where Vijay Mallya had given his personal guarantee as well as corporate guarantee. So that empowers the investigative agencies and the banks to attach their assets and go all out to get their money. So there is no comparison. Here you are armed with this corporate guarantee and personal guarantee. But the cases which are coming to IBC, that's a different process altogether. Most of the cases, there is no corporate guarantee or personal guarantee. And then if you have, as Mr. Kumar said, where I agree with him, if you are in SR Steel or Binani Cement or Bhushan Steel, you get 80%, 90%, 100%. But if you are in service sector and certain other areas, you don't get as much money because ultimately market decides. Now, I refuse to believe there could be stray cases, but I refuse to believe that the entire mechanism is rigged. Then I would need to, if it is rigged, how can it be rigged? Like, for instance, if when the government goes for divestment process, there's a fair valuation, and that's in a sealed envelope. Even the concerned secretary, the bureaucrat, does not know. Here, there is a liquidation value arrived at, and it's only with the RP professional Ashish is standing here. Now, if it's rigged, then the RP professional, the resolution professional, has to actually leak it and tell the bidders, look, this is this much only liquidation process, liquidation money. So you don't bid beyond that, you will get yours. So I refuse to believe that this system is compromised.
Come in here.
And one more.
Rigged? No, but who is saying it's rigged?
No, so that is what I'm saying.
Who is saying it's rigged?
No, if it's not rigged, then this is the market value of it. You have to accept it. Just one thing I want to make it very clear. I think there is a distortion how I look at the Videocon asset. Now, Videocon has three assets. One is telecom. One is it's the oil field in Brazil. And the third is their electronic goods. Now, what has been settled is the telecom doesn't exist at all. Now the oil assets, which is in Brazil, it's not included here at all. So on your left hand side, what you are saying, the obligation to the bank is much higher. And if you are on the right hand side, you should not include in the Brazil oil assets at all. Now, if you remove that, then it will not be 6%. It will not be in single digit. It will be in double digits. So there is a distortion how you are, or most of us are understanding the resolution process in Videocon, because this does not include its major of, I think it's a 50% of it will be, subject to correction, Ashish and Mr. Rajneesh Kumar would say, this does not include the Brazil oil assets. So as and when you get the Brazil oil assets, then definitely it will be much more. So let's see it in a apple to apple comparison. This is not the case what is happening in Videocon.
Okay, so you're talking specifically about who has got his hands dirty and managed to bring something like Jet Airways to resolution in the
Well, firstly, good evening to all the viewers. And, I certainly don't think this criticism is fair. I may sound a bit biased because I'm practicing in this profession. Look at what's happened in these 5 years. and look at how the government has stood behind this, look at how the regulators have, kept their ears to the ground. They have changed and amended, the regulations and laws as we move along. And I think I'll quote Dr. Sahu here that, the success of IBC is not to be seen from the recoveries. And I completely endorse what Mr. Rajneesh Kumar said, that the success has to be seen also from what's happening before IBC. So there are thousands of cases which have been filed. The creditors are empowered now with so much more than what they've ever been before. So, and also I would say that, to look at it as a recovery and haircut, these terms are not how the IBC was first, promulgated. If you look at the BLRC report as well, this is a resolution mechanism. It is shifting the economic resources from unable, from which is able to run it to a more solid hand. And idea is to continue with employment, generate better returns from that investment. So it is not a liquidation process. India is one of the few countries which has got this, two-step process. The first expectation is revival of the company. And revival of the company, if that was not the case, and if the bankers are only looking at, what is my recovery, it would mean complete destruction of value, assets which have been created on the ground. So I certainly feel that, this criticism is unfair. I think, the question, I cannot comment on Mr. Harsh's tweet, but, whether this is a sham, I mean, of course, I'm sure there are stories out there, there are cases out there, but look at how strongly the government has stood behind, 29A, the change of management being so important in all of this. So I don't think it merits, the criticism that it's, getting now. Back to you.
Okay, so let's take the haircut part out of the equation. You're saying we should not look at whether you got 26%, 30%, 40%, 50%. It's about continuing the business. So let me come back to you, Mr. Rajneesh Kumar, with a very commonly asked question. I'm not saying that the question is right or wrong. It is, of course, in financial terms, completely incorrect to compare a business loan to a personal loan, to a housing loan, to other categories of loans. But I think we must address this general perception that if a business fails, then the liability and the pain is much less, and a bank can still walk away with 60-70% of a haircut and call it a success. But if there is an inability to return a loan, remember, I'm talking in the context of a pandemic that we are going through right now. If there's an inability to return a loan taken by an individual creditor, it's a whole different ballgame. Can you explain to us why you think that's the wrong way to look at it?
See, even in case of, you're talking about retail creditors, like agriculture, how much loan has been paid, because it is not economically viable. It is not because the farmers don't want to pay, but the question is because they don't have sufficient earnings to service the debt. So it is the same situation, right? And then periodically governments come and give merrily the debt. About the housing loan, you can say because people put their house as a security, or if they put gold as a security, then lenders obviously will enforce that security. If companies' assets are there, which are mortgaged, which are hard assets, again I would say, on that the haircut is not as high as what you have mentioned. Haircut or the loss to the lenders is more when those assets lose their value. Take an example of a power plant. Today, if you want to put a power plant, it will cost for a thermal power plant anywhere between 7.5 to 8 crore per megawatt to put a power plant. But if the power plant is incomplete and the lenders have assessed that it will take 8 crore per megawatt, or if there are no coal linkages, or if there are no PPs or something happens, and it goes through NCLT process, then you can't recover the same amount of money. So it is ultimately, again and again, I'm saying that what are the hard assets, how much is the net, how much is the plant and machinery. There are valuation methodologies So you can't equate retail with corporate. And retail, today a good borrower gets a housing loan for 6.75%, which is equal to a AAA corporate borrower. So there is no discrimination in that sense, because it is presumed that the probability of default and enforcement action in case of a secured loan like a home loan will be very low. Accordingly, it is priced also very. Why do we unsecured loans? Can you get it 6.75%? You don't get it. At what rate you get it? 15%. So the banking is not such a simple thing. There is risk. There is a risk-reward matrix. And corporates you talk about, if we did not have the concept of the limited liability, do you think that anywhere the commerce or the business would have developed this much? The concept of limited liability is that the promoter who puts the equity, his loss is limited to that equity in that business. And that is how the business is done. But and there are why such an elaborate law around how the limited liability companies are managed. So that comparison is absolutely invalid comparison. And limited liability company, if we change that, then there will be no entrepreneur left in this country.
It's important for people to understand this. Yes, it's important for people to understand this, that why should a businessman, put his neck on the line if he is not given that cover or she is not given that cover. On the other hand, why it's important to sustain a business even if one set of promoters can't run it, because it has economic impact, their jobs on the line. So all of those factors come into play as well. I have one last question before I wrap, and Ashish, let me come to you on this and do a little crystal ball gazing. We're now in the middle of a pandemic. The process in the years to come?
Certainly, I think the impact of the pandemic on the business and commerce cannot be undermined. We are seeing, almost like what some of the economists call a K-shaped economy. We are seeing some of the strong companies, better companies getting stronger, and we are seeing, the smaller companies sort of sliding down the scale, and there's a huge amount of consolidation that one can expect. I don't think that this is going to be, in any way undermining the IBC process as such, because, wherever there's capitalism, there has to be an insolvency or a bankruptcy mechanism. Businesses are created by capitalists, enterprises are formed, and some will succeed, some will not. And this mechanism, it's almost like fresh start mechanism of, IBC, the way it's envisaged. And I'm sure, there are a lot of criticism about the timelines, about the recoveries that one is getting. But as we mature, as this law matures, let's remember it's only 5 years old. So as we mature and the businessman and new opportunity, like Mr. Ashish Kumar said, the limited liability concept has to be there. Only then will the entrepreneur invest and risk his capital. It cannot be that, if he sets up a new business, he's got to put out everything that he's done ever before. So I do believe that, IBC is here to stay.
Exactly. And we have to also see, look, the impact has yet to be assessed fully. We also have to see if the IBC is having a chilling effect on corporates wanting to take on fresh loans to expand, because they know if it goes south, it is their neck on the line in a lot of cases, and they may have to wash their hands off the company. So definitely the IBC is here to stay. Could it do with improvement? I'm sure everyone on the panel will also agree that yes, there is always room for improvement. Thank you so much to all of you for joining us on the discussion this evening.